Hi, everybody. Welcome to Ladies Power Lunch. So, today is a wonderful, wonderful day. I have made a new friend, and I'm so excited to share him with all of you today. Yes, you heard me right. We do have a gentleman on the show today, and what a gentleman it is. Jonathan, welcome. I'm not even going to have a whole bunch of preamble to introduce you because I feel as though once everybody meets you, then they'll understand why you had to be on the show today. Jonathan, welcome. Please tell everybody who you are and tell them about the wonderful, amazing things you're doing in the world.
Yes, of course. Well, hello to everybody out there. So my name is Jonathan Bengel, and I'm a business intuitive. I'm also a business profit tax coach extraordinaire, an IRS enrolled agent, a certified tax coach, and a certified tax planner. And what I do really, really, really well is I guide women and a few good men, healers and other intuitives and other speakers and authors through the darkness of making a whole lot of money, honeys, and shedding their taxes at the same time, and also transforming their lives to business financial happiness. And I do that through my #1 best-selling book, The ABCs of Deductions, an entrepreneur's guide to tax write-offs. I also do it through my online program called rapidtaxsavingsformula.com. And of course, I do it through what we call the Bengel experience, babies. When you're ready to leap and take a faith and take advantage of an opportunity, we help to unlock, uncover, and reveal the truth about your tax life and help you to improve it and to move into the new light of who you were born to be, which is a badass CEO.
So, Jonathan, I know you are a financial expert. I know you're a tax expert. I know you are an extraordinary accountant. I know you're really good at coaching us through working through the mire that is our taxes. Can you share with us who's the ideal person that you like to work with? Who is like your favorite type of person to get down and dirty with the money?
Well, it really depends, quite honestly, on who. Most people, let's put it like this, most people enter my world are definitely driven in the sense that they want to learn. So they want to finally get an aha. They realize that they need to do something with their lives in order to make the change. So what they'll figure out is they'll say, okay, I've been in business 2 to 3 years. I'm a sole proprietor or I'm an LLC. They have no idea what that means, but they just know that that's what their lawyers or someone told them to do. And they kind of go like, okay. And then they start paying these taxes, right? Because as we know, as we get better in our businesses, we start to make more money.
Yes.
And so they start having tax problems, AKA paying money at the end of the year to the government, and that frustrates them. And so then they turn around, they spin their wheels. So first they kind of go like, all right, I'll attend a webinar or a seminar somewhere and they'll learn a tip or two. And then they think that's the answer. And so they just get frustrated because it's not really driving them forward. In fact, I experienced this in marketing, for example. Like, okay, yes, I myself am one of those people that has to do it yourself first. So I'm like, I got to figure it out. But of course, you're just stuck and you don't really go anywhere. And so we just need to take the leap of faith and have faith in someone else who's the expert in what they do to propel us and take us forward. So usually it's going to boil down to, I have a tax problem, AKA I'm overpaying. And then the mistake that they make is they come to me in February, March, of April for a prior year. And then that's when I have to have a very sad conversation. And I have to say to them, unfortunately, I cannot give you tax advice to shred those taxes because the events already happened. Uncle Sam closed the door at 12:31 at 11:59 p.m. And so there's nothing we can do for you other than to process the return, but to move forward, we can do something for you. So it's somebody who's kind of like, I'm just frustrated and I'm ready to take a leap and make a difference in my life.
I hear what you're saying, and I see that this is beneficial for a lot of the people who are part of our Ladies Power Lunch community, because our intention for every single one of our members is for us to grow our businesses smarter, and to be making more money so that we can make choices about our lives that have more to do with desire and less to do with price tags. So if we get up tomorrow morning and we decide, you know what, I love this charity, I want to donate to this charity, it's not a problem because we have the cash flow to do it. So that's our intention here at Ladies Power Lunch. So my question is, how can we make sure that as we're making more money, because that's what we're doing over here. We're making more money. As we're making more money, how can we put ourselves in a position where we're making more money and we're keeping more of that money?
So the better way to look at that is the money that I'm making, all right, where do I strategically invest it? And here's why, right? Because we know that money is simply a symbolism of energy, right? It's a symbol of current, C, as it transfers from one hand to the next hand, right? So it cannot be possessed, it cannot be owned. And really, we're just the vehicle that's just moving the energy to one form to the next, right? We're the representative of it. And so, as a result of that, what we have to understand first, when it comes to taxation, Uncle Sam basically takes the position first that everything that you're earning as a taxpayer, whether it's an individual or a business, everything that you're earning is going to be subjected to income tax or capital gains tax, or just use the word tax. And so he could care less about anything else. Just Davia and your watchers, what you earn is what you're going to pay, right? And he's also going to base that upon your tax structure, right? Because Uncle Sam's a prude. And he doesn't like it when sole proprietors or single member LLCs practice different ways in which they engage with their entity. And so as a result, he charges a premium tax to do business like this because it's all about risk. So the reality is that all the money we make, he's going to tax us. So the question becomes, how do we mitigate that tax bill? Well, we can mitigate the tax bill by investing, which is another word for spending, our revenue. And so where do we put it? Well, that's the strategic question. So for example, I had a client, I was preparing the return. In fact, we just completed. And I said, I want to let you know, but you're going to owe $30,000 to the IRS for 2020. And I said, however, had you worked with me, and I know that there's some stuff that legally you're entitled to deduct right now, had you worked with us, your tax bill would have been 12,000. And so really it's about where would they put the money? So right now I have a client that's they're projected to owe in 2021 close to about 12,000. And that's not a big number for them per se, but they are kind of like, well, what else can we do instead of giving it to Uncle Sam? So the conversation we're having is all right, then, well, what can we do to improve your business? So put more money into marketing, put more money into staff, put more money into benefits for your staff, put more money into a tax coach to help you to keep your money. So,
Course.
it's kind of like, where do we want to put this money to ultimately reduce our taxable income downward? Now, here's what I'll say about charity. We all love to be charitable. That's the reality, right? Because we want to appreciate those that have helped us to get where we've come from. But here's the problem with charity. Uncle Sam is not in the business to be charitable. He's in the business to make money, and he knows that you're in the business to make a lot of it too. So what I often say is, before we go and form nonprofits, or before we start to donate money to nonprofits, what is another way in which we can still support an organization that still allows us to deduct it as a fully relatable tax deduction that reduces our taxable income downward? Because charitable donations are going to be met with issues, and therefore makes it more difficult to really reduce your taxes.
I see. That is new news to me, actually, because I mean, we do a lot of charitable donation through Our Ladies Power Lunch, and so you know, finding better ways to make use of those things is really, really important. I also noticed that you talk a little bit about the tax structure of the company that you have. Talk a little bit more about those two things, a little bit more about what happens when we donate and also the sort of tax structures that we should be looking at when we're setting up our companies.
Well, the way that I love to explain the entity choice is by talking about SEX. And I know this is a PG or a G-rated show, so I can't really, but I'll tell you that if you just go Google on my show called Naked Tax Talk, I actually have an episode where I talk about SEX and entities. And this way we never forget the differences between a sole proprietor, an LLC, an S Corp, or a C Corp. So we have to understand what those different things are from a legal protection standpoint. And I just happen to use good old SEX to explain the differences. And to give you a hint, the sole proprietor is the person that it opens them up themselves to a possibility one time to have a child, for example, right? So I'm kind of, if you read between the lines here, right? So versus if I go and I form a corporation, it's like using and practicing safe sex. And so as a result, the protection is going to be very different. And so is the tax that's going to be applied is also going to be very different. So what often happens is that in America, we have this luxury where we get to wake up and decide that we're going to take charge of our own destiny, which Uncle Sam loves, by the way. And so we turn around and we just start offering our services or our products or our widgets or whatever we're going to do. And so in the immediate sense of the sole proprietorship, the default tax rate is 15.3% minimum on anything that you make over $400. You're going to be immediately hit with a 15.3% tax. And then we have to add another tax called the ordinary income tax, which when I teach it in my class in Rapid Tax Savings Formula, I actually draw the diagram so you can actually understand how it works. And essentially, this tax bracket right now is 0 to 37.5%. With the new reconciliation bill they're coming out with, and also the new, what's the word I'm looking for, infrastructure bill they're creating, they're projected to increase that tax rate up to 39.5%. So with that being said, it's going to be really done with the sales, the income tax rate. So let's say you're very, very successful, like some people that come into my world that generate between 100,000 or more in gross revenue. They're still a sole proprietor, or they think because they heard it somewhere from the hairdresser, or they heard it from the dog sitter, or they heard it from their yard guy that said, oh, just go create an LLC and it'll save you taxes. But what they don't understand is that does not save you tax at all. It just protects you. And Uncle Sam appreciates it. Don't get us wrong. He appreciates it. But he's like, oh, Divya, good try, honey. Good try. I'm so glad you tried to protect yourself a little bit more, but I still don't appreciate the way you do business. And so you're going to pay some taxes on that, right? So if you are very successful, you could potentially be facing a 52.3% income tax as a sole proprietor or as a single member LLC. That does not change the structure. And so those structures can be things like general partnership and maybe becoming a limited partner in a partnership. It could be the creation of an S corporation or a C corporation. And here's the thing, and here's why I don't really talk about this in a lot of detail, because oftentimes what happens is taxpayers will go in and go, oh, I'm going to become an S corp. Oh, I'm going to become a C corp. And they do that, but then they fail to understand another principle. If I decide to be an S or a C corporation for tax purposes, I must act and treat my business as such. And when I don't, Uncle Sam comes a knocking. He's like, Davia, I saw, honey, you tried to become an S corp. Good job for you, baby. Good job. I love it, honey. I love it. But you know what? You forgot to follow a few rules. You forgot to follow the minimum compensation rules that's now determined by the United States tax courts in 2017. You forgot to keep all of your S corp records. Where are your stocks that you issued? You don't have any, so how can you have a corporation? Oh, Davia, honey, I want to see your balance sheet. What's that? Right? What's that? Right? Oh, Davia, I want to see your distributions and your contributions. I want to see your retained earnings statement.
You're what
What's
now?
what? Right? So you get the point. So we think, oh, I'm going to just mitigate the tax and I'm just going to become a C or an S corp. But then we forget all about the rules that we have to follow. Does that make sense?
Look, it makes perfect sense, but I've got to tell you, Jonathan, you are unique in that you, as a tax accountant, you are supporting your clients who are small business owners. I can tell you, and I'm speaking from personal experience, and I know very many of our members will tell you the exact same thing. Our accountants don't have these conversations with us. They don't explain this stuff to us. And so we don't know what we don't know. And there's a whole lot that we don't know.
And you know what? And thank you for bringing that up because as a tax professional in my industry, there's a fine line here between tax advice and tax consulting and representation and tax preparation and bookkeeping and accounting. And it's a really, really fine line. And what happens is that 99% of taxpayers assume that when they come in and they give us their summary of all their activity for the whole year and they pay us just $100 to file a tax return, that used to be my old rates, by the way, which are now a gajillion, double the price for that, right? But I digress. So what happens is we charge these low rates, well, for our own purposes, because we want to close deals and whatever else, but I digress. So what happens, they come in and they give us the summary and they expect us to then turn around and give them advice of how to shed the tax, but they're not paying for that engagement. And a lot of accountants like myself who wake up and go, whoa, 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 Davia, did you know that every time I ask a client who comes in for tax prep and I say, where's your mileage log? Where's your rental agreement? Where's your home office stuff? Where's this? Where's that? And when we plug it into the return, right? It's a deduction. We're seeing the tax come down, which means we're putting more money into the client's pocket. And that's okay. That's fine. But that is not the purpose of a preparation. The purpose of preparation is to make sure that we are putting together your summarization of your financials and making sure it's done correctly for the benefit of you and for the government. The advice or the consulting is when we open our mouths and we say, where's this, where's that, do this, do that. That has
Mhm.
value behind it. So give you an example. The client that I said that was going to pay $30,000 for 2020, right? They engaged us to put this together today, well, actually this week. And based on what they provided to us, I knew that they were overstating their income. They were entitled to additional deductions based on the way they had showed us the summary. So it wasn't like we're going to create new things. It's not like we're going to invent anything. We're just going to point out that they're entitled to more deductions that they're entitled to take, that they're already in the books. They're just not spread out correctly. So what do? We go back and we say, well, I can cut that tax bill for you, but are you willing to invest for us to unlock that for you so that you don't have to pay the money? And so ultimately, that's exactly what's going to happen. The next step will be, here's our fee, which is usually about $5,000 to $6,000, but in exchange, you're only going to pay $12,000 to the government instead of the 30.
So we've just paid ourselves and paid you right there, I think.
Correct.
So you are, here's the question. We're almost at the end of quarter three. We're going into Q4. What do we do now?
Right
Should we all
now,
come knocking on your door today? Is this what needs to be happening?
listen, I am ready to go on like power dating. I am ready to have a glass of wine and I am ready to see if we are a good fit with each other because you're absolutely right. You're absolutely right. I always say, look, I don't want to be that sales guy that's like this time only and this time only, right? Like, or you have to make a decision today, right? Like, I don't like being that guy, but I always say it's not me. It really isn't. It's Uncle Sam who's giving us the pressure to give you a time deadline. And so the truth of the matter is if we're going to save you money like we did for one of our clients, we close a deal, $201,205 in tax savings that they're going to get back, by the way. That kind of money is only coming from the tax planning in the future is what we're doing today, right? So if those are the results that we want to see, or right now, our average tax savings for our clients that make between $100,000 and $150,000, our average tax savings is over $39,000 in tax savings. So the only way to accomplish that is for you and all your wonderful ladies and women out there that I know that are just as powerful to come in and start having this conversation now so that we can develop what we call a customized tax roadmap that spells out these are the steps you're going to take. So for example, we just did a deal right now where we basically are advising our client to switch out the entity. So see, tax planning is a multifaceted aspect of life. So here's what we do as tax planners. Here's the secret sauce. The first thing we do is we go, how do we shift the income? Well, in rapidtaxsavingsformula.com, we actually talk about that shifting and what does that actually look like and mean. We talk about the entity choice. So there's a hint. So we shift the income. The second thing we're going to look at is shifting the expense, moving something that might be ordinarily personal and finding a way in which to convert it into a business related expense. Here's a tip and just the tip. For example, the cell phone. So every one of us uses it, right? And it's kind of like our personal at times and our business at times. Well, the Uncle Sam, he made a rule change back in the teens BC. I say that instead of saying before COVID, I just say BC. So back in like, I think it was in 14 or 13 BC. And he had said that your cell phone now, just take the full cost of it for the business because we know it's primarily being used in your business anyways as an entrepreneur. So what is normally a personal expense now becomes a business related expense. And the benefit that we receive as a business owner is called a fringe benefit. This is the legal term that we use to explain a personal benefit inside of the business, but where you got to use like the word fringe benefit. But anyways, so back to this whole topic of coming back. Now is the time to act. So just like with our clients right now, what do we need to do to cut taxes? Right now, we're doing income and expense shifting. The next thing we have to do is look for loopholes inside the law. So these are going to be things like gift lease add backs. These are going to be things like employee retention tax credits that are now available to us. These are going to be all kinds of other little loopholes that incentivize us to take action. Then we're going to look for what we call income tax free loopholes. So these are going to be things like looking at maybe adding more money to your Roth accounts, even though there's no benefit today, there's a benefit tomorrow, or funding your personal traditional IRA for today's benefit, not for tomorrow. Or if you are a business owner, which I know we all are, then we are entitled to something called a self-employee pension plan. It's called a SEP plan that allows us to contribute up to a maximum, I think it's $56,000 right now, I believe it is. The numbers might be a little higher, or 25% of the wages or the net income if you're a sole proprietor that we can contribute to such a plan. And so we can calculate that. We can actually start today planning for that. And the way we fund it is through the tax savings. Because here's the truth. As I said earlier, money goes from this hand to this hand, right? Comes in and goes out. And Uncle Sam is more than happy to take it. But he also makes the argument that he doesn't want it, which is my argument in my book, The ABCs of Deductions. And he says, well, don't give it to me. Let's divert it. I only want a piece. Don't get me wrong. He wants a little bit. He wants a little nugget. But everything else, he wants you to divert it. So we look for income tax strategies that also further reduces your bill for your benefit. Because looks, we forget that our companies can act as a retirement vehicle. We're so busy thinking about Roths and IRAs and traditionals and all of this other crap that we can do. But the truth is if we set up our businesses and set them up correctly, we can actually sell them or bring in somebody else and train them to take over for us. We can literally take our active business and turn it into passive income when we're older. We can sell it later and retire on that revenue. So the thing about it is now we have to have a succession conversation. If you're in your 60s and you have a business, we need to start having a succession conversation. Who's going to take over and are they, or are you better off selling it? Because unfortunately, a lot of taxpayers don't realize that their businesses are an investment, which is why, if you would ask me, how many children do I have? And I'll answer it for you. I have three. I have a 19-year-old. His name is JB Financial, and he's my tax preparation business. I have a 2-year-old. His name is Naked Tax Talk. And that was my unplanned pregnancy 2 years ago. And then I have my third company, which is simply jonathanbengel.com. And that is my education and tax advisory business. And he's also 2 years old. So you see, I talk about my businesses like my children, which again, I teach this in Rapid, because as we know, for us women out there that have children, we know that if we work really hard and set them up for success, let's be real, we're secretly hoping that they take care of us and they put us in that back apartment somewhere. Like, let's be real. We hope they call us up and like, Mama, I got you. Don't you worry. I'll take care of that hospital bill for you. Mama, don't worry. I'll take you on a trip to Hawaii. Right? We know this to be true. So why not let our businesses do the same thing for us?
I love this. Jonathan, listen, you know how they say time flies when you're having fun. Apparently, we've been having tons of fun and talking about taxes. Fun while talking about taxes. These don't usually happen in the same sentence for me,
No.
not at all. I'm so excited that you're here. I would love to invite you back because we're almost right out of time. But before you go, I want to do two things. I just want to invite Donna, who's also been so kind to join us here in our Zoom studio, to just take a quick moment to introduce yourself to our group, say who you are and what it is that you do, Donna.
Hey, so happy to see both of you, two of my favorite people I met a few weeks ago. So I am Donna McPherson. I'm an on-call CFO and business advisor working with the business owners who want to increase their wealth through their business. So what Jonathan is saying, I am right on point with it. Your business is an asset.
It's absolutely an
Let's
asset. I
start
love
using
this.
it as one.
I feel like we have the perfect quorum in this room right now for
Yes.
every single person in our Ladies Power Lunch community to be superstar successful. We have some really, really great comments over in the Ladies Power Lunch Facebook group. I'd invite you both to check them out later. We even have a couple of your clients over there saying really nice things about you, Jonathan. So everybody
Ooh.
knows that, hey, he's not just making this stuff up, he's actually really, really committed to making sure that not only are we making more money, but we're also keeping the money that we're making while staying on point with the way that the law is set up. And that's super important. I really, really feel that I really enjoy paying my taxes. I'm not going to lie. I really, really do. And I'm one of those people who, when I look at my tax bill and I see that it's higher than it was last year, it's encouraging to me because that means that my business is growing, right? But if you can sit with somebody who can really explain a lot of this stuff to you, and guys, I'm married to an accountant, right? So
No.
let me explain to you that the only thing that's keeping my marriage together is the fact that we never talk about accounting. Because I really find that whole topic to be super, super boring. And I know there are lots of us in our community who, when it comes to the moment where we have to talk about the money, it's daunting. I would rather hand over everything and have somebody just take care of it rather than look at it myself. But looking at it myself is super important. I've got to know my numbers. I have to understand what the balance sheet actually is. I have to be able to answer those questions when Uncle Sam comes and asks me, "Oh, so now you're an S corp, but are you taking care of all the things that are required of an S corp?" I need to know that. I'm in business. I got up and I said I was going to start a business. Guess what, guys? I'm in it now. But the good news is we have the support. And this is what we talk about in our Ladies Power Lunch community. Every single thing that you need to be successful in your business is right here in this room. It's our members. A lot of us are entrepreneurs, but we forget that even before we got into this entrepreneurial lifestyle, that we were doing something amazing, maybe in corporate, or we were doing something amazing, whether it was learning the thing that we're great at. So I want to invite you all to feel really free to reach out to each other and take advantage of the services that we offer to each other, because that's how we're all going to grow. I want to invite you, Jonathan. I know you have a nice little free gift for our community today. Would you be willing to share with us what that is?
Yeah, actually. So it is called the 5 steps to business financial happiness. And I'm sure I can share the link somewhere. Maybe you already have it.
Well, can
I,
you say it?
I can.
Yeah.
It's well, no, I cannot.
Okay.
Because it's a bit.ly link.
Okay.
Hello. You know how this works in the
You
world
need
of
to get pretty links,
marketing?
okay? This
I
is
gotta get like I gotta have
You
something
got to
that's
get
like
pretty
this.
links. I'm just giving you a little tip from me to you. You've already shared enough with us.
I'm
Okay,
gonna
so I have the link, guys. So what I'm going to do is I'm going to drop it in the chat right afterwards. And if you are watching on YouTube, check the show notes. If you are listening to us on our podcast, just check the show notes. You will see the link to get your free gift from Jonathan. And Jonathan, tell us what your gift is.
So what it is, it's essentially rapid tax savings formula, but in a nutshell. So I actually walk you through what I call my seed method. So first, it starts with the profit mindset, believing that you are a badass CEO capable of making a ton of money, while at the same time being able to make better business decisions. And truly what I do in that first session is I introduce you to the most powerful person in the world, and that's your soul. I introduce you to them so that way it can guide you. You can guide yourself. You can tune to yourself. Why? Because when I was 14 years old, on September the 11th of 1995, I wrote the following phrase: nobody will give me encouragement except for myself. You, Jonathan, never give up. So that was my soul talking to me, and it's always guided me my whole entire life. And so I take this time to introduce you to that. The next step is called the separation of self. Remember how I talked about my kids, my 3 kids? We go into detail. We actually dive into that deeper. And in that process, I teach you how to pay yourself 3 ways. 2 ways has a tax issue, but there's a benefit there. And the third way is something that's more commonly referred to as, well, let's just not say for legal purposes what it is. We'll do it in the class. And then the third way is we talk about entities, so we can understand, again, these structures and why we move into the structures that we move into and when to make that move. And then the last, we talk about the advanced deductions, and I teach you how to hire your children or your grandchildren to do the jobs for you so that you can continue to be the badass CEO that you were born to be. And then we end it with all of the document templates that you need to protect yourself in the event of an audit. So it's really just a really quick synopsis of that entire program. I, of course, expanded out more, but that's one great thing that you can do. And once you enter my world, you can go get my book, The ABCs. You can check out rapidtaxsavingsformula.com. But I want to also say something about real quick, Dr. Davia, and that is, as you said earlier, I don't mind paying my taxes. I'm okay with paying my taxes because it symbolizes my success. And I would say that is great. What it comes down to is the percentage
Mhm.
of income and tax. That's what we're chasing. So what we do, what I do as a tax planner, is I take our clients from, let's say, again, that 52.3% tax rate, and we drop it all the way down closer to about 12%, 12 to 18%. That's a huge percentage point difference. And that's what we're talking about. So it's not necessarily about the money I'm paying, it's about the percentage that I'm
Yes.
paying.
Absolutely. I love all of that. Jonathan, I love your gift that you're giving to everybody, and we should be so lucky to get such an amazing gift from you. And I'm going to dip into your pocket, Jonathan. I'm going to take one more gift out. I'm going to give away to one lucky person who's on the call with us today a 20-minute consultation with you for 100% free. I just did that, Jonathan. What are you
I
going to do?
I graciously accept. And you know what? Since you're gifting 20 minutes, I'll gift another 20 minutes and we'll make it 40 minutes. And it's really simple, actually. What we'll do is when we figure out who this lucky person is, we will have my director of operations will contact you and set you up on a personalized tax opportunity discovery session. And because right now we're booked out, we are completely booked out. There's no openings right now because this is how busy we are because
Of
it's
course
close
you
to year
are.
end. But
Mhm.
for your guests, I will open up a special slot for at least one of them.
Okay, so how we're going to do this is you are going to choose the lucky number. So please choose a number between 1 and 20, your favorite number
1 in
between 1 and
20.
20.
Well, my numerology code, my purpose here in life is my birth code is a number. Are you ready?
I'm ready.
11.
I gotta tell you, there are no accidents in life. The winner today is Manda Stack, and Manda is a dear friend of mine, and she's about to become one of your dear friends as well. Manda, congratulations. You are our winner today. And of course, everybody's a winner. You get a free gift from Jonathan, and you get a free gift from Jonathan. Everybody gets a free gift from Jonathan. So I'm going to post the link in the chat and y'all can take advantage of that. Thank you so much, Jonathan. Thanks, Donna, for joining us today. I am so grateful, so humbled to have such amazing guests on the show. And I invite y'all to tune in next time for another wonderful show on Ladies Power Lunch. See you on the next show. Bye, everyone.
Thank you, Dr. Davia. Thank you, viewers out there. I appreciate you all.